Hey, what's up ICT traders? Welcome back to the channel. In today's video, I will be showing you something a little bit advanced and a little bit intermediate. I want to show you how you can do intraday top-down analysis. And then in this video, the goal is actually to show you what time frame to focus on and how to filter out the number of data or how much data you need for the trade. All right, I want to show you how to do that because this becomes really difficult as you begin to go further in your studies or to go further in understanding how the ICT concept works. If you are new here, what we are trying to do here is to try to arrange some of the very important ICT knowledge you need in order to become a profitable trader. So you may consider subscribing to this channel. So I want to show you how to do intraday top-down analysis. Now, doing this will help you to know what is your bias for the day. So let me show you the time frame that is best suited for you as an intraday trader. I want to believe that you already know everything about most of the things: breakout structure, market structure shift, fair value gap, mitigation block, order block. If you have not watched the videos, they are right there in this YouTube channel. Go ahead and watch them. So this is a gold chart. I want to show you how I will do top-down analysis for intraday on this chart. So the first thing I will do is I mostly use the 4-hour time frame as the highest time frame I will check, and this is on the 4-hour time frame. And then if you want to go higher than 4 hour, don't go above the daily time frame. The daily time frame should be the highest if you want to go above the 4 hour. But the 4 hour can show you almost everything you need. And secondly, how much data do you need? Where can you deduce your directional bias? So right here, I have price coming downward, you see, after moving up to do some balancing of this liquidity void, and price was crashing down. Now, that doesn't mean I should not pay attention to this place, but the most recent data, the most recent information is what I'm looking for. That means if I have price action like this, let's say I have a bullish movement, high, low, break of structure, low, break of structure. Now, I have this break of structure and I have this one. And this is the most recent. I don't need this guy. Why? Because price has done this already. The most recent one is my area of focus. I don't want to look at that area because price is no longer interested in the first one. The most recent is what we are looking at. The same thing with this price action. Look at this. Price has been coming down, retraced, shifting structure, because this was an uptrend for the meantime. Boom, uptrend, price went up, creating this low, retracing, but it had a failure push up, crashing below the low, higher low that was created. So that was a shift in market structure. I hope somebody is learning something here. Shift in market structure. So if that was a shift in market structure, what does that mean? I am no longer bullish but bearish in my momentum. But aside from that, you shouldn't also leave the external information that is left on this side of the chart. Now, why did price push downward? Simply what? Liquidity rate. They are looking for liquidity to poach liquidity in the direction of the movement. So look at this. We have liquidity resting here, liquidity resting here, liquidity resting here. What did we say about liquidity? We have external range liquidity and internal range liquidity. And liquidity can be found where you see these lows or highs. So this place, if we say we have liquidity here, we are not wrong. So after price have pushed downward, purging this liquidity and this one, what do you expect price to do? Actually, most of the time, price will retrace into an area where it has discount before it continues in the original direction. So we have this price range. If we pick our fib level, we have this price range. Boom, from here to here. And now price have done the liquidity rate. We are expecting price to retrace back into where? premium area before we continue the sell. So this is the basis for this trading analysis. So two things will happen here. You wait for price to retrace back into premium, which is you trading with the trend, or you can do a miniature counter trading. I told you this initially. It is always very much possible to do this miniature counter trading. So right here on the 15-minute or the 1 hour time frame, let me go to the 1 hour time frame and show you what that means. On the 1 hour time frame, you will also see that price is bearish after finishing with those liquidity areas. All you need after that one in the lower time frame, all you need, you see a shift in structure, all you need in the lower time frame, price will retrace back into premium. In the lower time frame, you need a shift in structure and take the buy back to the premium. So that is what counter trading is. So you have a shift in structure and you take the buy back into this area, because this will take some time. Sometimes it takes 1 day, 2 days, and sometimes it takes 3 days for that retracement to completely finish. So this is why you need to take trades in the wrong direction, but the wrong direction is only for the higher time frame, not for you. All right, so it happens many times. I take trade, I am counter trading or counter trending the movement, but with understanding that price is heading up to a particular location. So look at this. Look at this, for example. You remember the push down? I told you a shift in market structure came in right here. Boom. That was a shift in market structure to the upside. I hope you know that. Even from here, we can see a shift in market structure here. All right, but then we kept having price doing all these ones. But this was the correct place that price finally gave you the shift in structure. If you are to take this trade to the upside, you will be in this trade for long. All right, you will be in this trade, even though you will not get stopped out, honestly, but you will be in this trade for long to this fair value gap, because price is going to be respecting this fair value gap. So as you watch it, notice what price did. Price is doing the retracement from here. Price always gives you an entry after shifting structure. What do you look out for? On the 5 minute, you see a breaker block. That is why I said if you have not watched the videos on these concepts, go and watch it. A breaker block right here. Boom. An entry. And price is going. Now that doesn't mean you are completely violating the law of the trend is your friend. No, you are simply, and I mean it, you are simply retracing back into this area before the sell continues, and you're taking advantage of that retracement. You don't want to wait for this to happen. Imagine how many hours, maybe a complete day for this to retrace back to that area. So that is why you need this type of movement. And if you are doing it, you will be so happy taking these kind of trades without any challenge. So that is what counter trading is all about. All right. I will be stopping from here. I will continue with the lessons that will help you to become proper and become better in your trading. Thank you very much, guys. Make sure you hit the like button and subscribe to this channel. Thank you, guys. See you in another video.